So let me introduce the rest of the panel now. To the left of Dr. McNaughton, we have Mr. Terrence Clarke. He's currently the general manager of a listed investments holding company, and his background is in economics, finance, and investments. Terrence is the founder and director of a fintech company in Trinidad and Tobago that has an online platform for linking borrowers of capital, for example, companies, state-owned enterprises, or governments, with institutional investors like banks, pension plans, mutual funds, and credit unions. And he's also a former general manager of the Trinidad and Tobago Securities and Exchange Commission. So his perspective is unique in that sense on the panel, in that it covers the roles of both the regulator and the innovator. So that is Mr. Terrence Clarke. And to his left is Mr. Nigel Stoddard, who is the Deputy Director of the Financial Intelligence Unit of Trinidad and Tobago. And he has been serving in this position since his appointment in 2011, with 18 years prior experience in the anti-money laundering and counter-financing of terrorism area, AML-CFT. He's the holder of an MBA and a BSc degree in Computing and Information Systems. He's also an accredited financial investigator, and he's received training from the UK, from the Caribbean Financial Action Task Force, or the CFATF, the USA, the Inter-American Committee Against Terrorism, also known as SICTE, to name a few, all in the AML-CFT area. Mr. Stoddard is a country assessor, trained in both the third and fourth round CFATF as a law enforcement expert, and he's participated in the mutual evaluation of a country. And he's attended and presented in seminars and workshops related to anti-money laundering and counter-financing of terrorism, and has represented Trinidad and Tobago at regional and international meetings in this area. So I'll give first Mr. Clarke an opportunity to comment on the general topic, which relates to getting the regulatory environment right, and maybe any impressions he might share, the opening presentation by Dr. McNaughton.
Thank you very much, and thank you very much, especially Shiva, for the invitation to speak. One of the topics that we have here, it's in terms of the Fintech 3.0, the focus I've noticed has been a lot on the payment system. Fintech goes beyond payments. Fintech is also about lending. Fintech is about advisory services. Fintech is about credit rating services. Fintech is about real estate services. There are a whole range of different issues. And I've noticed that there has been that shift, that focus a little bit on the payment system here. What our colleague had said is very interesting from what has happened in Jamaica. They have actually gone quite a way in actually implementing systems. They have actually seen how you could actually have the regulator working alongside with the implementer. That is relatively rare. And in Trinidad, we have had some successes, and we've also had some situations where they have not been so successful. I know of a company, for example, in about 2010, what they wanted to do was to be able to have a card that everybody who going into a maxi taxi could just swipe. And that immediately means no cash. Think about the implications of that, a crime. I don't know whatever happened to that because it's not around. On the other hand, I know of a company that was here last year where if you wanted to transfer cash from way down in the south of Trinidad to way up in the north, all you have to do now is to go to the nearest lotto booth. Once you sign up online with them, you go to the lotto booth and the funds will be transferred eventually to your system up in the north. Think about that for Carnival and all the parties that they have to go in Port of Spain. The point is, there are ways and means in which these things are working for some and not for others. What is important is making sure, as I think the point that you had raised before, the context has to be right, the institutions have to be right, and there must be collaboration. In my own particular sphere, in my particular business, I could give you horror stories. We first approach, let me take a step back. When people talk about regulators, there are two types of regulators. There are those that regulate money, deposits in a bank, and there are those that regulate investments, mutual funds, bonds, stocks, those things. The first one is regulated by the central bank. So a lot of the discussions here have been around the central bank. It's about deposits, it's about payments. There is a separate act for that, Financial Institutions Act of 2009. On this side here, you have the investment side. That is regulated by the Trinidad and Tobago Securities and Exchange Commission. They are governed by the Securities Act 2012. A significant difference between the two is that under the Financial Act, if you have a new product or new service, there is stipulated in the Act, I believe it's section 51, so how to approach that. There's a particular time period by which the central bank has to respond to you. If they do not respond to you within a particular period of time, you're good to go. Go ahead and start doing this stuff. The SEC does not have that. When we approached the SEC in 2012 with our idea, that was a period of fear. Remember, there was a meltdown all over the world. And in Trinidad, the CL financial breakdown had happened. What that meant was that everybody was afraid about where they were putting their money. Our focus is on the institutional investors. We're not talking about the retail investors. Institutional investors are those institutions that actually manage money on behalf of the individual mom and pop. So we're talking about mutual funds, pension plans, those type of organizations. They were afraid, and they said, tell me what the SEC says. Sounds good, sounds like a great idea, let's do it. Tell me what the SEC says. We went to the SEC told us that is not really covered in our act. So within a week or so, you should be able to get a letter, and what we were looking for is a letter of no objection. Mm-hmm. It's been 5 years and 3 months later. And we could talk about that. But the point is, and I think it gets back to a comment that was made here by the former minister. Why? Why are we waiting? What we had developed when we came up with the idea didn't exist anywhere. You've heard about it from a retail perspective. You may have heard of Prosper, Funding Circle. You may have heard of those things that exist overseas. What we were talking about here is something strictly for institutional investors and large companies. So we are talking anywhere from $1 million to $1 billion that you could use our platform on. This is not a mom and pop operation. We are talking about the big boys. So what's the risk? And as I was told, it doesn't exist anywhere in our law. But there was fear. And when there's fear, there's always the resistance. And as a regulator, I was there. I knew how they thought, I knew what they were thinking, and no matter what my experience was, no matter how much they were my friends, there was the fear. First is the fear of, okay, what if I get something wrong, what happens? And this is where the collaboration would have been good. Let's sit down and talk about it. But that's not the way it's done. You stay over there, we will send something in writing to you. And we've been waiting. We've been having some feedbacks back and forth, but at the end of the day, they started by saying it doesn't exist. To this is who you really are, because we are trying to find out what box you fit into. So we found a box. By the way, they changed the law to create that box, because it was a Securities Act 1995. While we were talking to them, they became a Securities Act 2012. And they put us in a box in 2012. And then afterwards, after we've gone down that path, they said, you know what, sorry, wrong box. You should be over here. I'm not joking. Imagine you as an entrepreneur having to go through all this. I have triplets. How am I supposed to feed them? The point is, though, the approach that should be taken when we talk about the sandboxes, that's relatively new. But we have been talking to them from day one because I know them. And I said, listen, you don't have anything like this anywhere in the region. Let's sit down and talk it through so you understand what it is we have here. So we could have a framework. So we could talk about it together. But as I said, that was not the thinking back in that time. That has now become relatively normal thinking in England, in Canada, and up to last week, they have now started talking about it in the States. Let's create this area, this little space where you could actually experiment. And that's great. And that's what needs to be done. A balance needs to be set. And we don't have that balance quite as yet. And we do not need, and we should not have to be looking overseas to try and figure out what to do. From 5 years ago, we told you we could have sat down and talk about you. I would not be surprised if within 6 months somebody comes and says, hey, come and experiment in this little area here. And it gets back to that point. What does innovation mean? What is our culture for that? How do we handle it? How do we pursue it? How do we encourage it? And what's the role of the regulator? Is it just to support the banks so everything has to be in the framework of what banks do? Or are you going to be allowing institutions like myself to be able to come up and do something a little different that can maybe add some competition to what the banks are doing?
Okay, thank you. Thank you, Mr. Clarke. That, in fact, is right down the line in terms of the topic we are discussing on this panel about getting it right. And the first bullet point there was, does regulatory uncertainty stymie innovation? And it certainly stops progress, right? So although innovation might be a little wider, maybe someone might come up with an idea to do something new within a framework that they're more comfortable with. But we want to expand our horizons for sure. So I'll move from the entrepreneur now to the controller. This is Mr. Stoddard, who is the Deputy Director of the Financial Intelligence Unit, and you could give us your initial impressions of the topic and the presentations.
Thank you, Chair, and I would like to thank Shiva for inviting the FIU to this forum. Dr. McNaughton's presentation was on point. What I would like to start off by saying is that at the FIU, we are not similar to the central bank in the sense of doing both prudential and AML, anti-money laundering, and corporate financing of terrorism regulation. The FIU is strictly regulating what we call professionals for AML and CFT. So my slant would be more along the lines of the AML CFT aspect and the regulation that goes with it. One of the things that unfortunately, even in Dr. King's presentation with the islands, it's a true representation of what, or reality, so to speak, of what it is. Most of the regulations relative to AML CFT is driven by what you call the G7 or the G20 countries. And you would understand why, to some extent, regulators are a bit slow, to some extent, in taking up the mantle. Just to look back into what would have transpired in the region with blacklisting of those offshore jurisdictions, where the reputational risk involved is such a great extent that it goes beyond the mere players within the market, but to the country itself and in who they have to deal with globally, which again comes back to the same G7 or G20 as we put it. So you could understand, as we said, it's a delicate balance, but you could understand why there is some hesitance on the regulator side. Again, when you look at the issue that Trinidad would have had with an insurance company, I won't say the blame, but there's a lot of fingers that has to be pointed, and when fingers are pointed, point at, okay, this may have been happening, but who was regulating? Who was looking? Who was doing this? And again, it comes back to the regulator, and it encourages that sort of slow approach. But clearly, based on Dr. McNaughton's presentation, the collaboration aspect of it, and I'm interested in what he said, how Jamaica approached it. And it appears as though Jamaica, although they may have taken a little longer in introducing the mobile payment system, it appears as though there was a willingness on both sides, to come to some sort of solution, not just for, again, I don't know if they were looking at the financial system in that sense, in terms of beneficial to the banks and so on, but whether they were looking at the consumers in terms of the population and what is needed. So clearly that approach, and when you look at the map that he put up between Kenya and Jamaica, you definitely see the amount of legislation that went into it to reach to that point. And again, regulation in any jurisdiction, especially within the Caribbean, where you have opposition on a government party, and where they change quite frequently, and one position that may be adopted now may not be the position adopted again. So you could understand the length of process, but you must have that system in place. But I like the aspect of the approach that was taken with the regulator in Jamaica to bring that sort of interaction. I always like a quote with some technical background, but it comes from one of the movies, Star Trek, where the Borg, if those who are Trekkie fans, where the Borg were infiltrating the system. And one of the famous quotes is, resistance is futile. It's futile. And it's so apparent that, yes, there may be resistance, but at the end of the day, it's futile, because the system itself is moving towards that sort of virtual system, currency, that sort of fintech approach. And what is happening is that the regulators, and I'm including myself here as a regulator for AML-CFT, but regulators need to update their skill set and knowledge when it comes to virtual currencies or new innovative methods that come within the market space. Now, the Financial Action Task Force, which has 40 recommendations that deals with anti-money laundering and the counter-financing of terrorism, have also put out a guideline in 2015, which deals with to guide a risk-based approach towards virtual currencies. And in that sense, what you have happening is they are trying to apply recommendation that was initially set up and built on the traditional systems to a new innovative system. Now, there is, like in Trinidad and Tobago, there is financial obligation regulation speaks to new technology and dealing with new technology when it comes into the market. And it comes with, when it comes into the market, there must be some sort of risk-based approach deal with it. In other words, we cannot be driven by fear, as Terrence said, or perception, but we have to be data-driven in terms of getting the information to make informative decisions. So what I am seeing that is happening within the region, or I should say in Trinidad and Tobago, what I hope would be happening soon is that not only beside the fear and the perception that is happening, but an actual drive in terms of data that would guide the risk, so that there could be that speedier process in dealing with this innovation. And that collaboration has to come from the various stakeholders, whether it be the academia as well as the persons within the system itself. But a more meaningful approach has to be taken to really deal with it. Right? So again, it is a good presentation, like I said, of Dr. McNaughton to the end, his points in terms of the institutional matters and collaboration. Just sorry that he didn't have much time to go into consumer protection, because that in itself plays a big role in how the entire system operates. Because really the consumer is the one, or the clients are the one who really drive the system. If it is that those persons in social services decide that they want a new system, or they're not willing to accept what is being given to them, that is what is the impetus to drive, to push into a new innovative way to get things done.
Okay, good to start. I'll come back to Dr. McNaughton in terms of the points that Mr. Stoddard raised. But from having heard the three presenters, it certainly is clear that the regulators have a key role and an enabling role. Mr. Stoddard introduced a new aspect, though, where he talked about the political uncertainty from the Trinidad and Tobago example. If I come back to the Jamaica, though, once it had been determined, well, yes, this is banking business, it appeared that the developments were then bank-led, which meant that, okay, it went at the pace the banks might have liked. Right? Now, the banks are the ones who control the market. So what they're doing might be in their interest in terms of greater efficiencies of their business and so on. But I'm suggesting that it wouldn't have the same urgency as if it was someone coming in new, trying to grab a piece of that financial services market. So it is a more leisurely, orderly sort of rollout that might have been witnessed in Jamaica as opposed to Kenya, notwithstanding that the context also matters, and the context is somewhat different. I'll ask Dr. McNaughton to respond to some of the questions raised, especially in terms of the consumer aspects that he didn't actually get into, but also to ask, apart from bank-led here in the Caribbean, who else is there a business opportunity for anybody else apart from the banks in terms of the opinions that you might have heard from regulators in the Caribbean? Could it be anything else but bank-led here in the Caribbean? So consumers and that part.
All right, so let me address first the bank-led issue. And I think tomorrow you will hear from some of the operators from the Jamaican ecosystem. So bank-led here means that the mobile payment system must be anchored in the banking infrastructure. Mm-hmm. But at least two of the players that have come to market, while a bank, a commercial regulated bank, is a partner in that, the actual leadership and drive actually came from a non-bank operator. Okay. But a bank has to be a part of that partnership. So bank-led might be a little bit deceptive in the sense that you think of the commercial banks actually driving the business model and bringing it to market. It just means that it is anchored in the banking infrastructure, as against M-Pesa, which came as a telecoms-led and was driven by a telecoms operator. So I just want to make that clarification. The issue with the consumer is an interesting one. We ignore them at our peril, and that was the essence of the point that I wanted to make, right? So a lot of times there's a preoccupation with getting regulations right and providing the framework to authorize operators to come to the market under a set of governance mechanisms. I think what the operators in the Jamaican market are currently grappling with really is the issue of now, how do I get the consumer to A, perceive that this is worth their while, and then also secondarily, what are their responsibilities for consumer protection. So, just to use the example of the social payments, I made the point that a card offering was made by one of the banks in that system some 6 years ago, and the take-up is only 10%. So it suggests that you can't just assume that because the solution has come to market, consumers come flocking. You have to address the issues of, and I categorize it as perception. First of all, they have to perceive that this is better than cash, and it's worth their while to switch from cash as the medium of exchange to this kind of payment system. Then there's the issue of privacy. Traditional banking business has an element of the privacy of my transactions because I'm dealing with a banking entity, established banking entity. With a mobile payment system, you have many more operators involved in the ecosystem. And so what does that mean for the issue of privacy? And do consumer privacy laws protect the consumer in this setting? And then there's the issue of data protection. So there are a number of elements that existing consumer protection frameworks haven't quite addressed or contemplated that have to be dealt with the new emerging mobile payment system. And I think in the case of Jamaica, some of those are still, like the Data Protection Act is still being promulgated. So I think those are issues that are still to be addressed, I believe. At the end of the day, it has to be a case where the consumer perceives that this is worth their while, because it's a choice that they can make. They can make a choice to adopt these new payment systems or to revert to cash. I think Jamaica, like many of our jurisdictions, cash still dominates to the tune of maybe 70% of transactions. Yeah? So there's significant take-up to happen, and the consumer has to be willing and ready and believes that this is better than cash.
Okay. You want to say something? Okay. I don't know. I wasn't sure if you wanted to say something.
Yeah, I could say something.
Oh, okay. Yes, please go ahead, and then we'll open to the audience.
From your perspective, from what I'm hearing here, there was uncertain. Well, it's a classic case. They had the technology and they felt that the markets would just come. And it didn't happen. Mm-hmm. Someone on the ground will have, normally a typical businessman who will be hustling, will have realized this thing may or may not have to work. We have seen situations here, for example, where millions of dollars have been spent in the telecommunications sector to go and develop certain infrastructure on the assumption that the markets will come. Same scenario. And this is a big company talking about listed, lots of cash. You take the small entrepreneur outside there, he doesn't have the lots of cash. So before he actually goes out and prepares to spend $100 million, $200 million, he will put out a little bit and test. And he will go out and test a little bit again. And that is what is going on right now in the fintech area. It's smaller groups of 4 and 5 people who are all of a sudden coming up and changing the landscape of the financial industry, doing their little tests. And from there, those little sandboxes that we talk about, and they build from there. And I would like to think it should not be banks. Do not expect it only to be banks, because the banks operate and exist in their own right for their own purposes. And in the case of Trinidad, if you go back in time, the Home Mortgage Bank the Deposit Insurance Corporation, the Development Finance Corporation. All of these were financial institutions that were created by the government because the banks did not see it in their interest.
Mhm.
So somebody else had to come into the picture to actually to make some of these happen. And with technology now, it's now the software engineer who just graduated or who is still in university who is coming up with these ideas. So yeah, I'm hoping it's not banks that we're going to be dependent on. Sorry, go ahead.
Okay, let me open for the audience to get some questions now. Well, I saw Agri's hand first.
Yes, but I've got the microphone.
Yeah.
All right, I have two straightforward questions. One, how did Kenya change around the M-Pesa implementation? What other parts of the economy were impacted after that uptake? That's one. Two, I was very happy to hear Mr. Stoddard say that from a regulatory standpoint, they need training. That's good. There's hope and progress could be made. My question is, has the FIU gone out to see ways in which it can be trained in these emerging technologies? And from the FIU perspective, does it see itself as playing a role in the whole sandboxing of these technologies?
Who will take the first part? The first one was Kenya. Mhm.
Yeah, so your question was how did M-Pesa transform the Kenyan economy? Yeah. Listen, M-Pesa is such a studied system. In a sense, it was almost a perfect storm when it happened. So you had these three sort of dominant issues: adaptive and progressive regulation, a regulator who was prepared to see what happened. You had this latent demand for this kind of service because of the social issues that existed in Kenya at the time. And you had an operator such as Safaricom that were able to bring scale to the market. That's hard to replicate. One of the things that we're looked at in Jamaica when we explored the whole issue of path payments is, can we simulate scale by bringing this bundle of transactions that the government already has and pays out every other month to try and simulate that. So that was almost a kind of perfect storm. It's hard to explain the impact M-Pesa has had. We know that 80% of Kenyan households use M-Pesa system. We know it is used for not just remittances, it's used for payments, it's a platform for financial services innovation. So a whole bunch of financial intermediaries have spun off the M-Pesa system. But the best anecdote that illustrates it, and if you give me a minute to tell you what it is, because we had the technology permanent secretary at an event in Jamaica a couple of years ago, and we said, what does M-Pesa mean to the average Kenyan? He said, let me give you an example. He was at his office one day and someone called him from his house and said, listen, a pipe is broke and it's flooding the place and we need to get it fixed. So he called his plumber and said, listen, I have this situation. The plumber went, looked at the situation, assessed what needed to be done, told the guy, okay, I need to go get these parts. Takes a picture of the pipe, sends it to the guy, he sees it. So the plumber goes to the store and says, these are the parts that I need. So he's at his office. He hasn't left his office yet. So he pays the store. He sends the money so that the plumber can get the parts. The plumber goes, fixes the pipe, takes a picture, sends it to him and says, okay, pipe fixed. He sends the plumber his payment and the plumber is gone, okay? Now, take that same scenario and what would happen in our context. First of all, I would have to jump in my car and drive out to a plumber. Then I would have to go to the hardware with him to pay because I can't give him the money to pay. Then maybe I go back to my office while he's fixing it and then he gets it fixed. And then maybe I have to jump in my car, go to an ATM to get cash and then go and pay the guy, right? How much more inefficient is that transaction in an environment where we don't have a mobile payment system? The point is that, with financial inclusion and innovation, to me, the biggest impact of something like M-Pesa is it makes commerce more efficient. It removes friction from the economy. If you take an economy as a bundle of transactions and you add them all up, then those of us who, instead of spending 3 hours at the tax office paying a license or doing whatever, just think of the productivity impact. So that's my way of thinking about the impact of that kind of system on an economy at large.
Okay, and the part about the training, the training of the regulator, of the financial regulators, and involvement in setting up of sandboxes.
Thanks for the question. Interesting questions. The training aspect, I could definitely say that there is opportunity where I can speak from the FIU perspective, and where we do attend plenaries where FATF, Financial Action Task Force, where there are discussion papers in terms of, again, like virtual currencies and these new things, where you are part of the discussion, research are done, and you contribute as well. There's also a forum called the Egmont Group of FIUs, which is 4 FIUs. And at that forum, there are a training component within the establishment of the group that looks at all new systems or risk that is identified. And again, that is done there. Now, this is my second time attending this workshop. I was there last year and again, it's a learning experience as well. So on the last occasion, we had, I think, about 4 or 5 of our compliance officers attend as well, because again of the discussion that is being taken place, and again as a learning tool to understand what is happening. We also try, we have had interaction with Shiva in particular, and not to go into what the discussions have been about, but definitely trying to get a more collaborative approach or bring in more persons within the discussion, or to have that discussion to the forefront. Now, based on what the last panelists would have indicated from the central bank, I'm aware now that there is a policy that is being developed. Speaking to, as a role of the FI, as a regulator, AML-CFT regulator, we are part of the regulatory body in Trinidad and Tobago, and as well sit with TTSEC, which is the Securities and Exchange Commission, and Central Bank. We have that role where we would be contributing to, if policy papers come forward, we would comment on it. We would be pushing, we do discuss laws, we do, so that interaction of the sandbox or whatever terminology that approach may come, we do have that input where we can make a contribution. Again, it may come down to the established regulator or the regulator for the industry, who would definitely be the ultimate regulator. But as a regulator in the AML-CFT, we do have that voice, and we would, where we can, put our efforts in to raise that awareness, because like I said, it's coming. FATF already given guidelines in terms of virtual currency exchanges, where it's interact with the banks, and you have other jurisdictions, whether it be in North America, Asia part of it, Japan recently, Australia. There's a lot of regulation and guideline that is out there already that is dealing with it. So it's just a matter of time. But again, I understand the established regulator process. We being fairly new to the landscape, but I understand their process. But definitely, those other entities, jurisdictions, sorry, that have those systems already in place that give guidelines and so on, would definitely play a part in whatever policy that is being developed to come forward. And again, as the FIU have a voice, as far as we can, we definitely would encourage that sort of collaborative effort. Just on a side, we Trinidad and Tobago had done a national risk assessment, I think, which was started about 2 years ago, and which is part of, again, coming back to the FATF recommendation 1, which every jurisdiction have to do. You have to understand your risk and what your risks are. And it's an exercise that was done with government agencies and the private sector. And when I say government agencies, besides regulators, other government agencies, and the private sector in terms of persons who, or the business entities and financial institutions that make up the sector. And it was a good exercise in that the feedback coming out of it, you had to do an action plan that would be coming out of it. And the feedback from the financial institution and other professionals in terms of where they identify their risk and how they identify it and how they saw it, as a matter of fact, definitely guided the process. Because again, as regulators, if you're on one side, you would tend to stick to that one side thought or train. Mm-hmm. But having to hear how it works within the actual system and what can work, it gives you a better perspective in terms of what is happening. So coming out of it, there's new, what you'll be looking at as new and emerging threats, so to speak. It's defined as threats, but threats, and definitely virtual currencies and that aspect of it is something that would be taken, will be looked at coming up to the next risk assessment, national risk assessment. But already being here and thinking in the future, I'm already seeing where in developing that process or questionnaire to get that feedback, I definitely see where the innovators within the system would have to play a part in terms of guiding us to identify what are the questions we need to ask to understand where the risk is. Like I said before, we have to operate on a data-driven aspect as opposed to a fear aspect or uncertainty aspect. And the only way we could do that is by interacting or sending out, just as the national risk assessment, sending out questionnaires and getting the actual information from the actual players within the market.
So you're advocating the collaboration among the various stakeholders again?
Well, yes, definitely. But like I said, based on where the national risk assessment is
closer
going,
Mike.
Sorry,
yeah.
Based on where the national risk assessment is going, you definitely, because again, as regulators, we only have part of it. And if I send out a questionnaire or something like that to do my research based on what I know, then the response I'm getting would not really guide me at the end of the day. So I have to get the interaction or the collaboration from the actual innovators within the market.
Right. And the thing is, from a regulator's point of view, it's a risk assessment, right? I'm sure the entrepreneur would have liked to hear it's an enabling assessment. You know, how can we get this thing done and get done effectively, safely, securely, and that sort of thing. So I guess the question is a perspective. I think Peter had the mic and seemed to have wanted to ask a question. So his hand was up early, but I think I had seen Ivory first. So let's go to Peter.
Thanks very much, Nigel. My question or comment is in relation, I guess, on consumer choice and the power of the consumer as it is in 2017. So in relation to a transaction, there's a transaction of value for a good or service, all right? Basically, the market decides what you're going to transfer, what for what, like for like. And, I guess as civilization grew, we originally started trading within the village. Everyone knew everybody. If you misbehaved, that led to ostracism or worse. And so whether you wanted to or not, you sort of acted as a positive member in society. You played fair, and that's how you survived and kept going. Then, of course, we became a more consumer society, and I guess we got to the point where we were trading in a larger place, in big cities, etc., etc. And so we didn't really know who we were dealing with a lot when we're doing transactions. And so I guess we got governments, we got bigger governments, and then, of course, we got regulation to cover those issues. Mindful of what Dr. King was saying, though, saying that destiny is now determined by not geography but connectivity for island states, and thinking of where we are in relation to the Caribbean, how the Caribbean people love to talk, and the mobile phone penetration and the Facebook penetration, and I'm sure Nigel can rattle off those figures off his head. I wondered what the panel thought about the thoughts on the power of the social media, and I guess you could ask the shareholders of United Airlines what they thought about the power of social media in the recent couple of weeks. And therefore, given these entrepreneurs are often young and they're probably online and using social media and have their businesses online, as we're talking about regulatory sandboxes, what we thought of consumer protection in relation to small to medium enterprises that were selling low-value products, and whether that was a better opportunity for the risk versus the reward of having alternative methods of payment.
I'm not quite sure I get it.
So
The role of social media?
Well, I guess what I'm saying is that if you were having consumer choice or protecting the consumer, one of the issues is about Bitcoin transactions. It goes one way, right? And if you don't get your product, you've lost your coin, and that's that. But I think there's the power of social media where the consumer now has a platform where they will be able to say that, Nigel Cassimire's ice cream shop did not deliver the ice cream that I wanted, and just took my money. And for a small value product of an ice cream that might cost a couple of dollars, I don't care if I lose my $1 or $2 if it's a lot faster method to do that transaction, and I don't have to go to 3 places, as we're talking about getting a ticket to the cinema. It takes, 6 months ago here in Trinidad, it took 2 trips to the cinema to get your ticket to the cinema, which just blows my mind. It has progressed and it has improved. But what I'm saying is, for a price of a ticket to the movies, I'm willing to risk $10 US to have that guaranteed ticket and do it from my desk. Maybe I wouldn't do that for purchasing a car. And so what I'm saying is that thinking about regulatory sandboxes, maybe not for the big ticket items, but for the little ticket items that a lot of these entrepreneurs are trying. It was just my thoughts.
Yeah. Anybody wants to? I think I have Cecil next.
Let me offer a thought on that. And so one of the ideas that came up earlier is that these technologies, these network technologies, create a kind of peer-to-peer power that sometimes exceeds the power of the centralized authority that we establish. So if you look at what's happening in hospitality, the peer review is far more powerful than what any sort of oversight or governing entity says. Yeah? When people use Airbnb, they are relying on a peer-to-peer transaction and what other peers say, right? And so these enabling networks create a new model for governance. They create a new model for ensuring fairness. And it's the power of your peers, right? Not some central authority. So I think that as we look at the opportunities in this space and the challenges of consumer protection, sometimes we need to draw parallels from some of these other sectors that have preceded banking and finance in relation to exploiting these technologies, whether it's the music industry, whether it's hospitality, whether it's the Airbnbs, the Ubers. They have very different governance mechanisms, but at the core of them is the enabling technology. In our jurisdiction, the fintechs, if you will. You're right. I mean, I don't know if that's the point you're making, but you're right that there are potentially new governance mechanisms that are emerging around these spaces that could be part of the solution for protecting the consumer.
Okay, Mr. Clarke.
Let me give you a particular example for the financial sector. Tesla. When Tesla came to market, and it's listed on the stock exchange in the States right now, they didn't have a product. They didn't know when they will have a product. They didn't know when the product is available, if it will work. They didn't know when it will be ready. And they went on the market. Whose risk is that? The shareholders still went in and the stock price increased phenomenally. And up to about a month ago, it is the largest car manufacturing company in the States by market share. Sorry, by market capitalization. The point is that, yes, there is a component of social media, but the bottom line is you're on your own. If it is that you're going to make a decision to go and invest, all that the regulator really does is tell you where the risks are. If you want to go ahead and still go and give him his money, that's your problem. And that's the role of the regulator ultimately. Now, I have heard different variations in different parts of the region, where they will try to go and tell the issuer what it is they can or can't do. So if, for example, somebody wants to go and issue bonds in the marketplace, and they have not done financial statements for years, I have heard where the regulator is saying you can't do it. You have to have financial statements. How else are you going to be able to protect the market? I think that perspective is wrong. You put in big, bold letters, there are no financial statements. If you want to invest, you go ahead and do it.
Yeah.
And that is the general approach that the regulations should be. You tend to find some of the other sides starting to encroach. But regulations, as I said, is not a straightforward thing. It is a balance, but really the typical approach in Western societies is buyer beware.
I'll answer the social media aspect in this way. Based on what, in terms of virtual currencies, where persons are either hacked or forget the passwords, or not forget the passwords, sorry. If they are hacked generally, or someone requested some service and they did not provide that service and so on, it goes towards the person being disenfranchised of whatever community or product that they would have. They would have lost something. And here is where the system includes now a law enforcement aspect, where there should be some aspect where...
Two more. No, go ahead. Go ahead.
Oh, sorry. There should be some aspect where that person is penalized for that action. Now it's difficult to, and I'm just speaking from the law enforcement aspect side of it, where as
Clarke.
Dr. McNaughton was saying, legislation, when he talks about data protection legislation, that is something, again, within Trinidad and Tobago that has to be developed as well. Cyber legislation, yes, there's legislation, but again, it's inadequate because when it was created, a lot of the legislation or the section didn't take into context what is happening now, and times have changed so much. Even with our electronic transfer, there's some aspects of the act, some section, important section, which haven't been claimed as yet either. So there is that risk to the consumer that yes, the consumer can invest, but there has to be some enforcement aspect where that investment that or scam, and there should be some sort of action that needs to be taken. Now, in my sphere at the FIU, just one quick scenario. It's difficult to see where you're seeing elderly persons, talking persons who have retired on their pension, and they're being scammed, and money is going out through cross-border payments. And there must be some sort of protection in place to deal with that. And again, it comes back to what I was saying before in terms of training to deal with to bring up the law enforcement aspect to that standard as well, to really deal with it effectively. So I agree that, yes, consumers, you have a right, and as part of it, you must take note of what you're investing in. But again, that's where the enforcement aspect or regulation, if someone is being scammed or someone is being hacked, as the case might be.
So while buyer beware, you feel that there should be sufficient recourse or punishment for scammers. We have two more questions. We are running out of time, so I'll take the two together and we will put them to the panel. Mr. McCain?
Okay, just maybe a comment on that last issue, the buyer beware. It becomes a social problem, which then becomes a political problem. So the regulators are therefore, through policy action, would be forced to take action. So it's not so, buyer beware is not an adequate protection because of that linkage. But the two questions I have, one is a clarification for Dr. McNaughton. Well, both are for Dr. McNaughton. You indicated that, I think, not quite sure heard it correctly, that in 2011, the regulator in Kenya took some action, and I'm suspecting that they did some guidelines and so on. And what was the effect of that? Was that put in within a financial framework or a banking framework the fact that this was already a telecoms-led, one. And two, what is the dominant model? Telecoms-led, banking-led, or hybrid? And is there a move for some amount of convergence to maybe the hybrid?
Okay, and I saw Dr. Malou earlier, so probably let's get to...
It's okay, I'll pass. My comment has already been made.
Oh, okay, thank you. Dr. McNaughton.
Yeah, so no, you're right. And again, the M-Pesa is a fascinating story. So yeah, there were some corrective measures that the Central Bank of Kenya had to take after the fact to backstop some of the issues, especially because the rest of the financial sector was howling no fear, because M-Pesa was becoming such a dominant player and they weren't subject to the same kind of strictures as the remainder of the financial sector. So there are corrective measures made around 2011, one of which was that there had to be a custodian bank behind the float so that at least there would be some oversight. and other things have happened. So what I think the key point is that this is what we call adaptive responsive regulation. So you don't try to come up with the perfect solution before the fact, but you allow the innovation to proceed, and then you make the corrections as you go. That's the essence of agile, right, Kim? Yeah. So yeah, that's I think that, I don't know if that answers the question. Or you're asking about the dominant model. I would have to think that it has become the bank-led, or where the bank is a major player in the system. I'm hard pressed to think of in recent times telecoms-led models emerging. There are a number of them. I can't quite quote the spread at the moment, but I think certainly in the Caribbean, I mean, there's a strong sense that bank-led is going to be the dominant play.
Okay, one last one from the entrepreneur in an entrepreneur in the house.
Okay. I'm just going to make a statement that's on the FATF website right now. The recent publication on cryptocurrency by FATF, which governs what you do, in the report, in the summary, there's a line, and I'll read the line. The lack of clarity regarding the responsibility for AML safety compliance, supervision, enforcement for these transactions that are segmented across several countries. It's part of the risk.
Lack of clarity.
So the risk is lack of clarity. Hence the question I asked earlier about training. And I'm glad that you're willing to have that discussion. Thank you.
There is one last thing I would like to just have the panel give me as a short impression on. We have some incentive with respect to the de-risking and so on to try to innovate in the Caribbean as regards financial transactions. Do you think we have the will or the courage to lead and move effectively in these new areas to give ourselves some alternatives to the banks and the strictures thereof, and in fact their own, one might even say, control by the international regulations and stipulations? Do you actually see us bucking the trend? Very quickly.
For me, what do you think?
You are certainly not seeing it.
No, no, I don't. I see that the banks will continue to dominate, and it will only come around when international markets start to change. Unfortunately, we copy, and it's a comment that came here before.
Okay, Dr. McNaughton, what do you think? Oh, okay.
Adversity drives innovation. The comment that the gentleman from the UK made, where he said that UK central bank, I believe, was testing the same system in terms of they were testing the system. And to me, that speaks volume in that, just as we see acceptance from international things, that is one aspect of it. But where that system, where that innovation is that you have a regulator willing to use the innovation to see how it could be applied, there is hope. At least there is hope.
But it's still happening in the UK, and we're waiting to follow.
No, it now started in the UK, if I understand it correctly, right? But yes, again, I'll come back to my opening statement. Adversity drives innovation. If there was a system similar to what happened in Kenya, in the region, then automatically we are forced to come up with innovative ways to overcome those adversities. And if this new ecosystem is it, then they would be forced to do that way.
All right, Dr. McNaughton, what do you think? Yes. Yes, it is.
I would have to say I'm optimistic. I think forums like this help when we bring together a diversity of persons, not only from the regulator, but from operators, from academia, and the tech community. That's where I started, right? I mean, context matters. And so I think that we have to find opportunities within our specific context to be agile and to experiment. So I take your earlier point that, digital financial services is a broad spectrum. In Jamaica at the moment, payments is a big opportunity. And so I think we have to exercise that in an agile way around testing if we can maximize returns from that. Right? So,
Let me just ask you a question. Would Jamaica have gone down that path if there wasn't an M-Pesa already?
I absolutely think so. I mean, I think the central bank took a deliberate approach to looking at this as part of an electronic payments system. So it seemed to have been a natural progression. But yeah, I think so. And then, of course, we're just speculating at this point. But so the context matters. The institutions matter greatly. What the regulators do at the end of the day is going to define whether we sink or swim. Because, I mean, they are the vested authority in this. So they can enable or they can constrain, but their role and their actions are going to have a significant impact. The collaboration, I think, is hugely important because the regulators are always going to have a limited bandwidth to absorb all of this thing. I mean, you need to get all the various players together. Again, a bunch of guys sitting up in academia that study this stuff because we have nothing else to do, right? So you bring them along with the technologists, along with the operators, and get a more diverse collective approach to a problem, which I agree. It's intimidating for regulators because of the size. And at the end of the day, consumers matter. We ignore them at our peril. So, final comments.
All right, please join me in thanking the panel for their comments and contributions. Thank you very much. That closes our final panel for the day.